All right.
Hello and welcome. Today, we're tackling one of the most fundamental questions in the tax world, a question that affects everyone from freelancers to new hires. Are you an employee or are you self-employed? It might seem like a simple distinction, but trust me, for tax purposes, it has enormous consequences. So let's dive in and get you the clarity you need. All right, here's our plan. First, we'll talk about why this status is so incredibly important. Then we'll get into the big tax difference between the two. After that, we're going to walk through the 4 key tests that the CRA and the courts use. We'll also look at a classic issue, what your contract says versus what actually happens day to day. And finally, I'll show you exactly how to get a rock-solid answer if you're ever in doubt.
So let's get right to it. Why do we even need to have this conversation? Well, it's simple really. Your employment status determines exactly who is on the hook for sending your tax money to the government. And believe me, getting this wrong is not a small mistake.
The stakes are pretty high. If you are classified incorrectly, you could be hit with a massive and completely unexpected tax bill. And it doesn't stop there. The Canada Revenue Agency, the CRA, will also tack on penalties and interest. That's a financial hole nobody wants to be in, which is why figuring this out up front is just so critical.
This really brings us to the core difference, the fundamental divide between being an employee and working for yourself. It all comes down to a single question. Who's writing the check to the government?
And this slide lays it out perfectly. If you're an employee, it's pretty hands-off for you. Your employer does the heavy lifting. They deduct your Canada Pension Plan contributions, EI premiums, and income tax right from your pay, and they send it all to the CRA. But if you're self-employed, you're the one in the driver's seat. You get the full gross amount, and the responsibility is 100% yours to save up and pay your own CPP and income tax.
Okay, so how do you figure out which one you are? Well, the Income Tax Act itself doesn't actually define employee. So to make the call, we have to turn to common law. Over the years, the courts and the CRA have developed a series of tests to look at the entire relationship between a worker and a payer.
And here they are, the big 4: control, ownership of tools, chance of profit or loss, and integration. Now, what's really important to remember is that no single test decides it all. The CRA looks at all of them together to get the full picture. Let's break down the first one, the control test.
So the control test. This one basically asks who's in charge here. An employer usually tells an employee not just what needs to get done, but also how to do it, when to do it, and where. And here's the key part. Even if your boss is very hands-off, the simple fact that they have the right to control your work is a huge sign of an employee relationship. A self-employed person, on the other hand, is hired to deliver a result, but they get to decide how they achieve it.
Next, we have the ownership of tools test. This one's pretty logical. Who's footing the bill for the stuff you need to do the job? If the company gives you a laptop, pays for the software, and provides the office space, that points strongly towards you being an employee. But if you're the one buying the specialized equipment, paying for your own software licenses, and covering repairs, well, that's a big indicator that you're running your own business. Our third test really cuts to the chase, financial risk. And the easiest way to think about it is this. Can you actually lose money on this job? As an employee, you're protected from that. You get your salary or wage no matter what. But a self-employed person is out on their own. They have costs, and if things go wrong, they can absolutely end up in the red. But on the flip side, they also have a real chance to make a profit that a salaried employee just doesn't. And finally, we have the integration test. This one asks, how woven into the business are you? If your work is a core, essential part of the company's main operations, like a chef in a restaurant, you're probably an employee. But if your work is more of an accessory, like an IT consultant who comes in once a month to fix the computers, you're more likely self-employed. And of course, getting things like paid vacation, sick days, and a pension, that's a classic sign of employment. Now, knowing those 4 tests is great, but you also have to understand how the CRA actually uses them. They don't just look at your contract and call it a day. No, they use a very practical 2-step approach to get to the truth of the relationship.
First, they look at intent. What did you and the payer agree to at the beginning? Did you sign an employment agreement or a contract for services? That's step 1. But here comes the crucial part. Step 2 is reality. The CRA then looks at what's actually happening every day. They apply those 4 tests we just talked about to see if the reality on the ground matches what the contract says.
And if there's one thing you remember from this, let it be this. You can have a contract that calls you an independent contractor in giant letters, but if, in reality, your boss sets your hours, gives you all your tools, and you have zero financial risk, the CRA is going to see you as an employee. What you do always, always matters more than what the paper says.
So after going through all this, you might be thinking, my situation seems a little fuzzy. Maybe some tests point one way and others point in the opposite direction. That's actually pretty common. But the good news is you absolutely do not have to guess.
And this is maybe the most valuable piece of practical advice I can give you. To clear up any and all doubt, both you and the person paying you can ask the CRA for an official ruling. They will look at your specific facts and give you a final binding decision. This completely removes the guesswork and the risk.
And getting that ruling is surprisingly simple. First, you just gather up your contract and any other documents about your working arrangement. Then, you can apply right online through your CRA My Account. That's usually the fastest way. Or you can fill out and mail in a form called the CPT-1. Once they've reviewed everything, they'll send you back a clear final decision. And just like that, you have your answer. So, let's just quickly recap what we've covered. First, your status is what decides who handles the taxes. Second, the reality of how you work is always more important than what's written in your contract. Third, use those 4 tests, control, tools, profit/loss, and integration to really analyze your situation. And finally, and most importantly, if there is any doubt in your mind, just ask the CRA for a ruling.
And so I'll leave you with this question to think about. Now that you have the framework, take an honest look at your work. Are you an essential gear working inside someone else's business machine, or are you truly the one running your own business? Answering that question correctly is the foundation of a sound financial future.